All right, hello everyone. Hope you guys had a good weekend. Now, I had a few guys ask a question. If we don't have time during the day, how can we just swing trade it and keep a position open for a few days? And the answer is quite simple. I've just done an update on the Excel on Excel. So on the Excel for SP 500. So if you go into your Astro Timing Analysis program, you'll find Excel there. So just open that up, okay? And that's going to give you a setup on all the Excels. Okay, so on the first three, which is what we're going to look at, but you can change all the others according to the same day as well. The first three, in any case, as you know, can give you enough to look at the future. So what I've done is on the first sheet, just completely rolled out all the harmonics going all the way into there. All right, so all the way into the future, just line them up. That's the first thing. That's done now. Okay, so you're done with that, nothing to worry about. The second thing is your swing days as per the date that I took as the low. Okay, which is there. So as you can see, that's happening as you can see there. All right, so don't worry about the red lines. I'm just measuring time. No big deal. Okay, so all you have to do, let me get rid of these so you don't get confused. Okay, and I will also get rid of this too. This is a regular trend line, not to worry. And so all you have to do now is add to this your technical analysis. So all the usual stuff we do, just add your channel in. You can also check out your long-term channels too, no problem. As you can see, we've got this thing going up. And I've got also for next week, I've also plotted the swing days, which I also posted for everything yesterday on Saturday. All right. So if we go up into the swing days, it might look too short. If we come down, we'll look to go up. But remember, this thing's going up. So the trend is up. As you can see, we've got higher highs and higher lows happening. So there's no reason for us to really go against the move. There's nothing to suggest that this is going to turn around as yet. Okay, so if we come down into the swing days, which we might do, nice and easy, we just go up. As you can see, there's still a bit of a gap here, and this zone we can mark in. So now I've got this zone plus I've got this zone. So if I have zones already, I can say to myself, this is going to be my zone, and then I can say, okay, you know what, this is going to be a sell zone for me. Okay, just for the sake of argument, if I decide to sell and go against the trend. But now I've got a place to get in and a place to target. So what I need to do now, every day, check where I closed off. And I close, if the day closed and I'm around here on this swing day and on that swing day, then here I'm looking to go up again. If the market closes up here somewhere, okay, then the market can also decide to roll down from there. But like I said, the bias is towards the upside. Now, what you can do with your Excel is, this is next week, but if you come to November, you can scroll this down all the way into 2025, and let me in fact go to 2024. November, I'm in November right now, so I've got next week for you, and I've got the week after that as well. So I can plot all of the days into the future from that Excel. Okay, I can just keep pushing it forward and do it for the other weeks as well. So I can do whatever that day is. Then we've got December starting. Okay, so I've got that, and then I've got that, and so on. You know, I can just keep doing all these swing days. And then I just have to match it to my technical analysis, just like here. You see these arrows, they were swing days, okay? So the market comes down, as you can see, nice and easy, and then the following week picking up from there as well. So once you got your bias, then that's it. You guys are just going to be following that through. Every time the market dips down back into your trend line, or your demand zone, okay, you're going to go with it. Now, if you're using your PST indicator as well, then you got prices happening. Now, for example, this week, the setup here will change into that. Remember, last week it was a different setup, but look, we're buying from the lows, as you can see. As soon as that finished, this happened, and that 58 was 5818. So all you have to do is just basically 5818. Close to there happened on Tuesday. Okay, boom, boom, and then the market started going up. Okay, and then if you match your swing hours as well accordingly, then you know where you're going. And day to day, you got targeting as well. So you don't have to be in front of the screen all the time. But if I got my swing days, I can plan ahead. So if I said to myself, well, I'm going to trade on swing days, and those are the only times I'm going to trade, I'm going to enter the trade according to what happens, then I can say I've got two options here. So I'm either going to come down into the swing days to go up, or the market's going to go up and come into the swing days. You know, one way or the other. So I'm already set up. I already have the plan. So this is all done deal. So all you have to do then is wait for the market to do what it needs to do. Okay, and that way you don't have to be, you know, looking at the screen all the time and thinking what's going to happen, where am I, and blah blah blah. And also use the technical analysis skills that we use, because they're the ones that really get you stuff. Like here as well. Look, remember previous weeks, I said, guys, this is going to be a target zone. Well, look, it's a swing day, we're going up. Now the same thing is really going to happen at this end, isn't it? We're going to have a zone if the market comes back into, which is this zone here, okay? It's going to close a gap, tap in, and then go back up again. So if you keep following it, then you know where to get in, you know where to target, and you can go with the market's run without having to, you know, go into all the nitty-gritty stuff. If you're going to do day trading, that's also fine, because if you're going to do day trading, you've got to be on top of your game at the hours, and the hours are normally New York hours, that are the busy ones, but it can happen in London as well. Then all you have to do is set the days, and if those days are quite close to each other as well, you see there's going to be something happening there. So I've got like 1, 2, 3 arrows here. You see it's like accumulating and then boom, down. Okay. So if we've got the same kind of stuff happening, then as we come up, we come down. As we come down, we go up. We're just going to follow that through, and that's the easiest way to do. Match that to your swing hours and your technical analysis and pricing. That's it. Also, the third Excel, all you've got to do is put your date up there. So if you, once again, go there, I've selected the date there, 13 October 2022, okay, 13 October 2022, and it is swing low. All right, and then all you have to do is you can measure the cycles from there. If you want to cherry pick, you can. You can take that into a whole bunch of periods. You can take it up to 20, 30, 40. You can take it like full on. It doesn't have to stop at 15 or 13 or 10 or whatever. In fact, let me do that for you. All right, so that's taking you all the way into August 2025. All right, so if I was to take a look, in fact 2026, okay, August 2026. So let's take a look. So I've got, what do I have here? Let's bring it all the way down here. I also have, let's check out November. We're in November. We've got 29th of November here. Plus, let's see, 29th of November, correct. So 29th of November, I'm just going to take this into 29th of November here. All right. So that's going to be also on the cycle Excel. If you want to do day to degree projection, you can just put in the dates. If you want to do price into time, do that. Put in the days, take the range. If you want to do time into time, you can do that and take the top and the bottom, okay, and push it into range. If you want to keep it nice and simple, do it like this, okay. So then if we're up here, this is going to be like a sell zone, okay. Market might sell here, get back into there, sell again, or go up here, come back into here, go up again. So all I have to do is basically now focus on these days and not muck around in between. And that's basically it. Here, these things are already done. Let's see if I had anything for November, for example, 11th of November in the cycles. We had November 15. All right, so November 15 is, there's your November 15, right? So boom, market comes down. When it comes into your zone, you can go long. Now this is the next zone, so there you go, all right? So the market, why is this a zone? Because there's a gap there, okay? You can see that gap happening there. So if the market does pull back down, come into the trend line, stop sweep, I can go up. It needs to match your technical analysis. If it matches your technical analysis, you can go with it. If I take a look at the past, do the same thing for the past. That's your low, that's your harmonics starting. So I'm marking all the harmonics, okay? And once I understand the market's direction, I'm okay with it. If this is an impulse wave down, which it is, and we've broken below and closed below the swing, market does an A, B, C up, comes back down, retests, sells off, okay? Same kind of thing. Or if you take a look at it from the perspective of an impulse wave, like we should be doing from top to there, then what did you have to do? Put your Fibonacci's in. Where did they sell off? 37.5. Now if I was to go back to check on my Excel, on the second Excel, if that was a swing day or these were swing days, what do you think I will get? Let's take a look, shall we? Go to your second Excel. Possible swings. When's that? 1st of September 2023. So let's go back to September 2023. September, here we are. September. So the 1st of September was a Friday. So when did we have a swing day? On the week of the 4th until the 8th. Let's check it out. There was a swing day on Monday. We had a Venus day. All right, so that's what, Monday. And then what else do I have? We have a Sat on Wednesday to Thursday. And then we've got Mercury on a Friday. Okay. And that 10.97 to exact 11 on Thursday, which is September 7. So September 7 and 8. Okay, plus September 4. Let's take a look at September 4. This is August. That's your September 4. That is a swing day right there. Okay, so you see market doing an ABC. This is exactly what we're learning. Impulse, ABC back 37.50. 25 right on the dot. Swing day, sell me baby, thank you. And then I've got what, Thursday, Friday, September 7, 8. Now look, September 7, September 8. What does that tell you? Oh, I better take profit because market may go back up again. Going back up. Okay, then what's this day for you? 15th of September on this day. What is 15th of September? 15th of September, is that 2023? Because that should be a harmonic, I think. September 18 was a harmonic, so that is September 18 is there. Let me get rid of this for a second because they're colliding. And let's come up here. Okay, do you see what I mean? Now we've got a sell, market comes down, closes gap. Swing days again coming in, market going up. September 18 is important for us. That September 18 is a Monday. All right, you can see that's 15, which is a Friday. So let's take a look at the swing days on your second Excel sheet for September, the week of September 11 to September 15, and figure out what to do. Well, on that week, we had swing day Wednesday. All right, girls, that was a Venus day. So we had a Wednesday. And that was it. And that was September 13. Just checking the others. 27, 27, 27, 28. Okay, we could do that Friday as well. That was a Jupiter day. All right, so 13 to the 15th. And let's take a look. On the 13th, that's your Monday, 11, 12, 13. Back to the support. Going up into Friday, whoopsie daisy, and your Friday sell-off day. Why you want to be selling here? Well, it's your impulse down, ABC up, going back up again. The market's selling off. Okay, if you didn't trust that, you'd wait till Monday. What would you do on Monday, the following week? You say, well, looks like we might be breaking down. Okay, so let's take a look at the week of September 18, when those days are going to happen. Okay, special days when we're going to be trading on that week. Oh, look, Monday and Tuesday. Why Monday? Venus day. Tuesday, Mercury day. So those are the days when we should be trading them off. That is the 19th, Tuesday. And then the market boomed down. Remember, the bias is to the downside. Why? Because we have an impulse wave which broke the support, closed under it, doing an A, B, C retracement into our GAN level, selling off on a swing day, going up into a swing day, coming down into a swing day, and then following through. Okay, so what should we be targeting? Well, now that we broke that zone, 150 is a fair target, 162 is a fair target, but not just that. What are you going to do when you're targeting anything? On top of that, you're going to say, where did they buy before? So you got the 137, you got the 150, you've got the 162. Okay, and yeah, and if you have a measured move, it should be double, which is 2 all the way down here. Okay, so that would have been on the cards for us. Why? Because that's your measurement. But look, you can do this. Remember how we've learned doing that? You take that and put it in. It's the same measurement. Okay, so then that's your measured move. Now look, that is your measured move. Okay, pretty much the same. You see, measured move. So then you measure the moves, and then you know. And then what you should be doing is looking for a swing day at those levels. Okay, why? Because you've done a measured move. That's your measured one. And once the market falls again, you take the same measurement. Look, that's your zone now. Then you take that same measurement. That's your zone now. So when you're in that zone now, Let's get rid of these because you would have aligned them. Now let's check if there's a swing day on these days. Okay, let's see, what day is that? That is the 27th of October. So let's get to October. October, the 27th of October, the week of that. So that's going to be on the week of the 23rd of October. So that's a Monday on the 23rd of October. When is the swing day on that week? We've got Monday, the 23rd, okay, which is right there, okay, 23rd. And then what else do I have? We've got Friday, because Saturday is a Venus day, so you're going to take Friday, and that's going to be the 27th of October, and that's your swing day on the Friday. So next week, Monday, is your golden day, and that's it. You start the day on the Monday, because Friday was your swing day. And then the following week, you keep following up like that. Your swing day, the next one is Thursday. Thursday is the 2nd of November. All right, so then you got your 3rd of November, remember, from your harmonic, and that's your 2nd of November. What a big day. Why do you know that's a big day? Well, check out the Jupiter on Thursday. You know what I mean? And boom, and that's your 3rd of November coming in there. It's a Friday, you're back up. Nice and easy. Okay? And that's basically it. Why it's not a good day to go long here? Because your measured move is telling you that's not the level. This is your measured move down. Remember, that's the original measured move. That's your second measured move coming from there. And that's your third measured move coming from there. So if you're going to measure it down, that's it. Would it be wrong to go long here? Let's say you said, well, they bought here and I'm going to go long. Even if you did go long, not a problem, bro, because you would have had a tight stop loss. And that would have been it. Not a problem, even if you did. Okay? But that would have been your measured move. So this is why technical analysis, and you got your days coming in as well, then it starts to make sense when you follow it through. Then you're not getting in and out everywhere. Alright? So if you want to just use it for the swing days, do your technical analysis, measure the moves. Now you could do the same thing, like I said, for the future. It's not going to change anything. Okay? We have an up move. The same thing to the opposite side, right? So we have here a measured move, right? And that's the same kind of thing. Once it starts to break out, this will be a measured move. Well, there you go. All right? So if they don't sell off here and keep pushing up, that's fine. And the move here is also good. Why? Look at that. 37.5. It's not Fibonacci, it's 37.5, just slightly under the 50 there. Nice and easy. Okay? And that's it. Now, was this a swing day? Well, let's take a look, because Monday was a swing day, I thought. On Thursday, we had a swing day on this one. Thursday here. All right, on that one. But Monday was a Dow Jones. Wednesday, Tuesday, Monday. That's your Monday. Because indices go together. If there's something on Dow Jones, I always say, hey, go for it on all the indices if you've got time and price together. If you don't, let it go. Okay? Same thing now here. So if this is going to be a measured move, well, look, that puts us right in that green zone, which I just put in there. Okay? So any pullback into a swing day, I don't mind going up. And that would be just following the trend in that direction. If you always follow the trend, look how good your swing days are. Because you're just following the trend. You're just following the trend. Okay? If you're going against the trend, obviously you're going to have a bit of mishmash, but still doable. And even if you did, you get a few wrong. You certainly do, like here as well. Okay, mind you, this wasn't such a bad day because the market's pushing down. That's an impulse, flag formation, and a breakdown. A breakdown on your swing day. This is actually not. This is actually a good day. It's not an incorrect day. Okay, so I can actually get rid of that there. End of story. And this is actually a good day. Okay, so you can just do that for the whole future. You can just mark your levels, let the price come to you, okay, and nail it on the trading day, and add to your trading day the trading hours you calculated or taken off the website, and that's it. All right, match it to your price, your time, you're done.